Hello everyone and welcome to today's Stocks and Crypto TA live stream with me, No FOMO Charts. It's about 6:30 a.m. Eastern Standard Time here in the USA, Monday morning. And this week is a big week for stocks. It's big tech, big technology earnings. This week, every major big technology company in the stock market is going to release their corporate financial quarterly earnings starting from Tuesday, Wednesday, and Thursday. And so that's going to be the primary focus of this live stream today. And we'll look at crypto as well. But we have to let us have a broader, higher level perspective on stocks and crypto because day trading right now, or even swing trading right now, with daily news releases equals volatility, basically. So we want to watch out for that this week. So because of earnings, usually I do not trade earnings 5 minutes after it comes out. I let the big money players react to it first. Let the big money react to it first. That's the key. So waiting a day or two to see what the big move is sometimes is actually the right move. It's the right play. Okay, so just be careful of volatility this week. Let's start with S&P 500 on this chart. So what happened? What's going on here? We had two red days in a row. And what we want to do is just when we zoom out to a weekly time frame, this is what I mean in one of my ideas is it looks like we're getting a potential lower low in the S&P 500. It's going to be very earnings dependent. So I need to prepare for two scenarios. If it's going to be a bull scenario, let's say companies such as Apple, Microsoft, Google, Amazon, etc., all have blowout surprise earnings to the upside, then we would probably honestly stop somewhere above 414. That's where I'm going to draw my support levels. I'm going to call it out. 414 support, 420 support. We have a resistance of 429, 436. So this is basically, these are the zones that I'm looking at for support on the left side. If we go really bad, then 410, then 400. If it's really good, maybe 444 and 450. So I'm using previous price level inflection points to get the support resistance as well. Hello, welcome to the stream. I'm gonna try to do a shorter stream today. So just go through the support resistance. We are in a daily downtrend, okay? But this is a little bit oversold at this point on some of these shorter medium term time frames, like a 15-minute or 1 hour. So we could see a bounce this morning just because of the technicals. But once the earnings reports start really releasing Tuesday, Wednesday, Thursday, morning and afternoon, pre-market and post-market, then we're gonna really see the market reaction. So for now, all I'm really going to say is, because I do not like to predict earnings, is we just watch the support levels and then watch the resistance levels in these gray lines. And we just play it like that, company by company. There's about 5 or 6 big companies reporting. Okay, so if you're in my Discord, just to give a quick little view of the Discord, you can see this, right? So every week I release a watch list. This week's watch list is just going to be the list of the stock earnings because that's probably the most important catalyst for this week. Some economic data and some current events and news. So what we have this week: Google, Microsoft, Facebook, Amazon, Apple, Twitter, just to name a few. And there's some big global companies as well. There's Coca-Cola, ATVI, Activision Blizzard, General Motors, Texas Instruments, UPS, Visa, Boeing, PayPal, Spotify, Domino's Pizza, MasterCard, Nokia, Overstock.com, Robinhood, Roku, Chevron, ExxonMobil, right? So it's not just big tech, it's these big global names. So it's a huge week for earnings this week. Huge, absolutely huge. So that's why I'm kind of cautioning people right now. Just brace yourself for stock volatility, and that could spill over to crypto volatility, either with uh, what is it? Bull move or bear move. I'm not gonna do requests today. Again, if you're trying to play, somebody on TradingView comment is doing a okay, that looks like a missed typo. So okay, I'm not gonna do requests today. So let's move on to the all right. So Dow Jones Industrial Index ETF, very similar, but if you kind of zoom out, you could see what's been happening. We're kind of topping out, right? We had our pandemic low and we've been uptrending. We went consolidation. Now it's starting to lose that momentum, start to bend down. So the bull case, if earnings are good, then we could actually have an upside down head and shoulders and get bullish continuation to the upside. But if earnings are bad, then you have a larger bearish head and shoulders pattern. So it's really a battle between the bulls and the bears right now, but the earnings is going to seal the deal. It's going to seal the finale. Okay. So I'm going to call out support and resistance and just the trend, and we'll just move on. So support at 325, 329, 330 in terms of dollars, $330, 335. The resistance above is 340, 341, 347, 351, and 356. I'm putting a lot just in case of the magnitude of the move. As on a weekly chart, we already double top on Dow Jones, and now we've kind of lost this the weekly head and shoulders for now. It could reverse in the bull case, but if it's a bear case, you could actually see a actual double bottom or a lower low could actually happen. So also keep in mind the FOMC chairman with the IMF conference, which was last week, 50 basis point rate hike in May. That's a couple weeks from now. So that was the bearish reaction on that one day. Okay, so if you're in my Discord, I posted the video link. I watched it live, 1 hour. You get the information faster than other people, and you can make a decision. Okay, so we just want to watch out for these support levels and the resistance levels as well, because some of those big companies, they're inside of the S&P 500 and the Dow Jones. It's going to move. Next, QQQ, probably the biggest. I mean, I know a lot of traders out there trade the M100. QQQ is the NASDAQ ETF. It's the big one. We're going to definitely see volatility here in the QQQ. So we have to get our support and resistance levels up, okay? 317, support 310, 300, 279, 267. I'm just going to put a bunch here for reference. Now the resistance to the upside is 333, 341, 348, 362, and 371. So then now we have the levels. Is it going to be a weekly, not a perfect head and shoulders, but this is what I'm saying. The NASDAQ is already going to test its double bottom range right at 322.30 for the weekly. I have to check futures as well. But this is what I'm saying. It's make or break it time for tech stocks. If tech stocks have really bad earnings, and every big major company has terrible earnings for the past 3 months, I'm expecting a deeper lower low. I'm just expecting that. But if the FANG stocks have good earnings, we could have a pivot point double bottom bullish and then bounce back up to 359. Okay, because tech stocks have taken a beating for 6 months because the FOMC tapering program, COVID-19, Omicron, and the Russia-Ukraine war, and now supply chain issues in China. So it's just 4 bad things. And then now we have the 5th catalyst, the earnings. The 4th or 5th catalyst is coming in 1 day from now. We're about to see what happens. So hopefully I give you a big perspective of what could potentially happen here. Right? We look at the bear and the bull, the down and the up case. Okay, next. Let's take a look at some of these individual stocks, because why am I so serious about earnings? Case in point, example, Netflix. Take a look at Netflix. right? This is what happens when a tech stock has very bad earnings. Okay, this is not the only tech stock that I've seen do this, where from the high of $695 just about 6 to 9 months ago, and now Netflix, at the time of this video, is negative 68% down from the top. Maybe even more if we have a strong magnet. Let's get accurate numbers here. Currently, basically negative 68, 69% down from its high. And then look at what are the catalysts? Earnings, bad earnings again. Was this earnings bad? Let's check. There's a double top here, right? So on Netflix, just for example, there was the head and shoulders, the downside, and then you have two bearish catalysts in a row. So then it was, what's the measured move is supposed to be negative 17%. So basically like negative 20%. But if you, right here at negative 17, we hit that. Then we went double the target, negative 34. And then we go triple the target, or 3.5 times the target. So this is what I'm cautioning people. Not every company is going to be this bad, but another case in point for tech was Intel. If I remember Intel earnings, there's the negative 25% drop as well as like last summer. I think it was here. It's one of these. No, it was last in the pandemic right here. So right here in the pandemic, so tech stocks can crash. I remember this day I was on a computer I was observing the earnings. Negative 20% down in one day. This is why be very, very careful with tech right now, because the big money hedge funds and institutions have been selling tech for 6 months plus. So be careful. Any bad earnings on tech, the shorts are going to attack that to the downside. The put option is going to attack it to the downside. So be careful is all I'm saying. That we don't get caught up in this, trying to long this. Like right here, for example, and then all of a sudden somebody wakes up and is down negative 40% the next day. That's not the right way to do it, right? That's the most risky way to do it. I didn't touch Netflix earnings at all. I shorted it the next morning. Made very, very good profit on April 20th. Negative 14% to the downside is phenomenal day for bears. So just be careful of that. Okay, this is why earnings, we don't want to buy into earnings because nobody knows exactly what's happening. Somebody could have a good guess, but nobody knows the exact number, or else that would be illegal insider trading. So just keep that in mind. But can it bounce back someday? It could one day when the sell-off is over, but who knows when that's going to be. Right now on the charts, there's no big, huge pattern saying we're about to go up on Netflix. It could be a little bounce on some of these. Netflix is not the greatest example to use, but some of these other companies, they could bounce up in the QQQ, right? 15 minute, it's really low. RSI, oversold at this point, so we could get a little bounce in the morning. Or at the same time, shorts can just crush. So just watch out for that. Okay, let me go a little faster here. Let's just go down the list because it's huge. But I just want to get the big players in order. So we'll go to Google. Google. All right, so Google was in this almost this descending wedge pattern on this daily. Okay, their earnings is Tuesday. It's tomorrow. So we lost the support level. I was drawing this on my own. The support level of 2,527, this gold line here, the yellow line is the support, and we lost it. A lot of stocks lost the support and went to the downside. But is it 100% game over? Quit the market? No. Traders are probably still going to play the oversold bounces, low day traders on 5-minute, 15-minute for the scalps. Swing traders probably waiting for earnings, after earnings. Investors are obviously looking at the earnings. Okay, so just want to keep that in mind. Now I'll just do support and resistance. Why is that important? Because this is predictable a long time ago. This is predictable a long time ago. Once we hit this gold line for 4 months, then I start drawing my support and resistance on the left side. So what is the support? There's a level here, 23.5, 23.52, 23.03, 22.34, 22 or 21.26. Levels to the downside. All right, this actual wedge can be measured. So if Google has terrible earnings, it can crash down negative 10%. So that would bring us right to this support level, like 22.66. I have to mark that target, 22.66 right here. And if it goes really bad, negative 20% down, if it's going to be a Netflix story, 2000 would be the two measurable support levels to the downside. If it's going to go to the upside, then we have 2619, 2700, and 2878, 3000 basically. So you can see here that in the bear case, we could hit any of these two targets on the way down. Like we could obviously bounce up, but obviously try to retest that to the downside as such. Or if it's bull case, it could at least retest 2521, the resistance ceiling above, or break into it, into the wedge, and then try to rally back into the wedge. Sometimes that happens. So I just showed you the bull case and the bear case for Google right now, depending on earnings. Okay, next, Microsoft. We're on Google. Let me check the weekly. We can see it's a weekly downtrend. All right, this is how I knew I need to change my positions to short positions, because this thing in a weekly, this thing is pointing down. So once we lost that support, this thing is going down. But it's not going to crash down to zero. This is not a crypto. It's a real company. So it's going to find a support level at some point, probably intraday bounce. And then if it's bad news, then the bears will attack again. If it's good news, we'll rally back up. Okay, next, Microsoft. Microsoft. So that was an old idea. Let's go to on the daily. And I'm using a line chart just so people can see on the stream. Sometimes if I use candles, people can't see. So I like a line chart. Yes, I did look at the SPY. That was the first ticker I looked at. So there's a replay after. And these are more swing trading and investing setups, so it's not like it's going to expire anytime soon. So just keep in mind we have big tech earnings this week. That's what I'm showing right now. Okay, Microsoft on a daily. Microsoft has not crashed like some of the other stocks. It is down pre-market, negative 1%. So European and Asian traders are shorting and selling. But at the same time, like you can see it on the intraday, right? It's not going to show up on my daily chart because it's not time. The market's not open yet. So sometimes you got to look at a 4-hour. But right here, you could see that the support obviously is right under here. Well, today's a pink box, but 277 support. This 276, 270 range is the support level. As soon as we lose that, it's downtrend, bearish continuation. We do have this kind of head and shoulders forming in the long term, but then if earnings are good, we have a potential double bottom in the short term, right? So that's why I'm preparing myself for two scenarios. If it's bull case scenario, if Microsoft has great earnings, double bottom right here, and then it's rallying straight up to 310 probably. So the resistance, 310, 315, they're 328, 343. The support to the downside, 274, 260, 243, and 224. I'll just put another one down here, 209. 360 is resistance. So you can see that the market is preparing itself for earnings. Right here. So on weekly, if we go to a weekly chart, you can see it kind of forming. It's not a perfect head and shoulders. It might not be textbook, but the general psychology is there. The bounce that we had our bull rally, but that's our weekly lower high. And so it's definitely possible to make a lower low on a weekly and then keep doing this. If not, it would be great if we have the bull rally like the double bottom. That would be great. But it's up to the earnings in the market. So hopefully that makes sense on Microsoft. Next. Let's go next. Facebook. Facebook. What can we say about Meta? So what's interesting though on Facebook is even though it's down again, -1% of the market, is at least on Friday's close, there was this potential support area which we just lost it this morning, but it's going to be an inflection point, meaning I think the price is going to bounce around here for a little bit, unless earnings really terrible on Wednesday. But if you could see here that Facebook, obviously this is the pandemic low, we had our rally, and then this is the big problem. I knew Facebook starting from last September, okay, if we cannot go up in 2022 this year, I knew we were in for a problem because the trend changed. This is why we use technical analysis. The trend changed. We went uptrend. This was almost a consolidation. It should have bounced up if we were going to continue the uptrend. Does that make sense? Like this, but it did not happen. We hit this became a lower high, and then we made a lower low. So right in July 2021 was the inflection point of the trend change. And that coincides with a bunch of hedge fund managers last summer saying they're going to start selling tech. They announced it to the entire world on Bloomberg last summer. So this tech crash is not a surprise to me. Tricky though with the perfect timing of doing it, but I guess if somebody draws a trend line, uses some of the TA, believes in the TA. Once we lost this, I knew this is the problem. And then earnings sealed was the final deal, right? But in terms of support and resistance right now, like the trend lines flip. The trend lines go this way now. It goes down now. You can also play this setup and this deep retracement. Erase everything, pull up some Fibonacci on Facebook. And Facebook is an old company, right? It lost that 786. It's trying to, maybe the 0.88 is going to be that next support. So this is where we use deep Fibonacci levels, 173, 145 support, resistance 195, 227, 263, 293, 300 if it ever gets back there. But they probably have to have some like amazing meta technology for that to happen or get bought out by somebody. Okay, so I'm not excited about this double bottom, okay, because it's starting to lose it. But again, swing trader, I'm thinking about investing right now. Swing traders, day traders, they might play the bounce this morning or tomorrow, okay, like a pre-earnings bounce, meaning this, and it could just bounce up. It's possible. It could bounce up several percent, or bears can attack and just keep putting pressure on the market. So that's why I'm not really going to day trade this week. I'm just going to observe the market financial earnings and then make my decision after that, personally. But people are free to do whatever they want. It's a free market, stock market. Okay. So next one, we'll just do a couple more and then move to do something else. Amazon. Okay, that was an example. But Amazon, you can see, again, even on Amazon, as much as I love it, right? We went from an uptrend, and this is 2020 right here, pandemic low, uptrend, but then we consolidated on Amazon for an entire year, and then Jeff Bezos left the company as CEO. So once that happened last year, not good. You had a basically weekly double top at 3771, and it was all downhill from there. So also somebody could draw this TA and say we lost that, retested, and now it's coming down. So when I think Amazon reports on Thursday, I believe, April 28th, Thursday, yes. Plus market, so watch out for that. And again, the support levels, there's not much support. It's kind of strange. I know Amazon's doing a stock split, but you can see right here on this left side, there's not much support. It almost kind of looks like crypto in a strange way, the rally. So the downside support is 2765, 2500, 2183, the big numbers, 2031, and then 2000 itself. This perspective will change whenever they do their stock earnings. But we can also use Fibonacci to get some additional ones. Basically close enough, right? This is how, like, you know that the tool, everything's aligning. The support's in the right spot where I just drew it is basically close enough to all the Fibonacci levels. This is basically correct. The resistance on the top, 3,000 right above, 3,200, 3,400, 3,600 basically. But if you look at a weekly on Amazon, you can see the uptrend rally went sideways. That's not good. If it was going to be good, we need to break to all-time highs, but nope. Nope. Pull back, double top. And now it's testing the support range above 2835. Interesting though, on the daily, Amazon could still make an upside down head and shoulders. If we're making a bull case, it could still do this measured move of 20%, which would be absolutely incredible. That would be on every news headline. So, okay, we'll put that target there just in case, 3,800. But the downside target, just use this structure right here, 10% to downside. Okay, 10% would bring us right to the support level of 2570. So that's the second target, the bear target, 2570. Okay, also we could probably do one more target, and just if we put this channel here, we see 20% to downside, so 20% would actually be the same target basically. So just want to check that. Hopefully this makes sense to people, that these are the big bear and the big bull targets over time. It's not going to happen in one day. This is more of a longer term investing, swing trading. The next one, Apple. Apple. So you can really see Apple right here. So if we rewind to September 2021, Apple saved us for those 3 months in the earnings. Once we saw this kind of trend change, this dirty upside down head and shoulders to the upside, that was great. This is what saved S&P 500. So I'm curious again, if this earnings season, Apple is going to save the market. That's the big question mark right now in a lot of these financial news publications is, will the FANG stocks, Facebook, Apple, Netflix, Google, etc., Amazon, are they going to save the entire stock market, yes or no? That's basically the question. Or is it going to be mixed? So there's three outcomes. It could go bull, it could go consolidate sideways, or it could go bear. There's only really three outcomes out of the season, earnings season. So Apple, support to downside would be 159, 156. This little spike down here, the March 14 low, 150, 147, 140 to the downside. Resistance above 166, 169, 173, 176, 180. And there's also some trend lines. You can see it just lost a trend line. That is not good for technical analysis. Although we could retest it to the upside, definitely possible. You saw we just barely lost this support. Just barely of the yellow line. So again, the bull case, okay, if Apple has phenomenal earnings, we could have upside down head and shoulders. It would be actually a huge move, 40%, but it has to break the neckline, which would just be a phenomenal bull continuation rally, just way up here. Seems a little bit ridiculous, but not impossible, right? How long did the last rally take? The last September, October. It took 95 days, so 3 months. It's possible, 3 months. Yeah, definitely possible. Yes. So it's not out of the question. But given all the information we have right now, is on a weekly though, if we zoom out, we could see that we just established the lower low. Lower low, lower high, lower low. Actually, it was a higher high, but then now this question is this going to hold and turn into upside down head and shoulders to the upside or not? Right here. If not, we lose 160, which we just did. But I'm talking about big swing trading moves. We have to hold above 157, 154 on Apple in this circle. Because you could see here that if this is a lower high long term, like a monthly lower high, then the lower low is way down here in a bear case. Okay, so I'm not talking about day trading or scalping right now. I'm talking about big swing trading moves, 3 months, 6 months, 9 months from now. Where's it going to go? So Apple, hopefully this made sense to people. Let's just get the bearish target. I don't want to just keep doing bull setups just in case. 10% to downside would bring us right down to 150. So that's our downside target. Our actual, this bull target might be too high, so the immediate bull target is 180. All right, next one, Twitter. Okay, so the news, if you haven't heard about this yet, is that Elon Musk is trying to buy Twitter for billions and billions of dollars. And after some back and forth with other institutions trying to take shareholder control greater than Elon Musk's, there's the news article. This is why I pay attention to this kind of news. Just bring it up because I don't want to just say it. Right here. I mean, I just picked up any news article from Google. The New York Times, okay, legitimate publication. Twitter in advanced talks to sell Twitter to Elon Musk on Sunday into the morning on Monday. Wow, so they're having this is a serious conversation. Right, 11 board member meeting. Elon Musk secured additional financing to buy Twitter and possibly take it private, and change a bunch of features, right? After he began lining the $46.5 billion in financing. So obviously, his initial bid was $54.20 a share. That's why we bounced up to $54.20 on the candle. Just went exactly to $54.20, basically, 55. So Twitter, has been an extremely volatile stock. So let's just look. Twitter also has earnings, so it's like a double catalyst on Thursday. It's going to be actually very interesting case study. But let's get some legitimate lines up here, TA lines. All right, so we have this trend line target to the upside. So 55 retest could be a bullish target if things break bull. We have the gap up here, so we have a gap support right here between 40 and 44. It is technically in a trend change reversal. So let me erase that. How do I know this? Because if you know trend, this is a downtrend. This is downtrending. It's just angling down. We found the support level, the reversal, and now it's uptrending. The question is can we make a higher high? Then go to 55. At today's price of $50, that would be a potential, basically 10% move. It's an interesting setup, right? But I'm not going to try to interpret exactly what's going to happen. Because who knows, maybe it could be a sell news event and it could crash. So it's questionable. That's why I give two targets. The downside target for bears, right, is we could use a little baby Fibonacci, a small one, like I like to say, small one. If this resistance gets rejected at 52 for whatever reason, then you could see it could retest 42, 40, 35. Like, for example, if the advanced negotiation talks all fail and cancel, then maybe we might retest the 40s again. But if it breaks bull, if we break through 52, I mean, 55, 57 is the immediate target right there. And then resistance to the left side, 58, 60, 63, 67. So I know me calling out numbers is kind of boring, but it's how not me, but how traders prepare for the market. If I don't have support and resistance levels and trend, then I basically, as a trader analyst, I have no idea what's going on with the stock. Just looking at this number is not enough for TA. So we're looking for real patterns and such. But what I'm seeing here on the 4 hour is, yes, of course, it is possibly, we held the support strong above 44, and we're trying to see if Twitter has good earnings and everything goes well, might see a higher high. If it's bad, double top and pull back down. What would be the measure move? Possibly 10% down. So let's see where that is. If we get rejected down for 52, 10% be a retest of 46. So We're looking at these two targets right now. Okay. And please keep in mind, it's not just tech stocks this week. There's a lot of global stocks. People are going to be busy. People are going to be busy, busy, busy this week. I bet a lot of analysts, they're just going to look so tired every day this week. Because yeah, I feel bad. It's because, just a side note, is whenever I see these news financial analysts, I mean, this is probably the hardest volatile time, even for a trader and an analyst or a news reporter. There's so many catalysts going on all at the same time right now. There's 5 at the same time. It's pretty wild right now in the stock market and crypto market. Okay, so let's keep going here just a little bit more, and then we'll switch over to crypto, and then we'll close out the stream. Just let me see if there's anything else interesting on the list that maybe we can learn from or analyze. No, PayPal's on here, so we'll do PayPal. Okay, so PayPal, that was an example from a different class. But this is an example. I mean, this is a perfect textbook example of trend change reversal. I mean, PayPal, what happened, right? So PayPal, this is the pandemic low, the pandemic high, and then we're back to the pandemic low 2 years later. Who would have thought PayPal, right? So, but this is what happens when a company kind of loses momentum and loses and has bad corporate earnings and some executive level changes and such. It's a perfect example. You have an uptrend to a sideways consolidation into a downtrend. This is literally trend change example, like textbook. How could I have foreseen that? One trend line, one or two, just this one, right? We draw one, and once that's lost, big red flag alert right there. Not good. Also, on a weekly chart, there was this topic. We have to go to candles. There was this double top right here in the zone. So $300. Isn't it phenomenal? We went from 300 down to 85 in 1 year on a major fintech company. Who would have thought, right? But that's the market for you. Stop. So again, this is what I'm saying. Watch out for these, for the bears and the put options. They've been waiting. If you think about it, bears and put options have been waiting for this opportunity for 2 years or 1 year. That's why they're having the greatest time of their life right now. Even me, I'm partaking in some of the shorts and the put options, right? But at the same time, I'm just saying, we went from an extreme bull market to the FOMC tapering program, all hedge funds, institutions trimming their positions, and then the shorts and bears and put options attack and obliterate the stock price. So now the question is, well, how low can PayPal go? I mean, if we pull up a weekly, we use this weekly Fibonacci on a logarithmic chart. Sometimes I like to do that. Interesting long-term view of PayPal. We just lost to 786. And the next support level is down 77, 70, 65. I don't know if it's ever going to go down to 40 or 30. Something really bad has to happen to the stock. I don't think it's gone down quite that low. I mean, that's basic back to the IPO price. We have to wonder. It might go as low as 65. I don't know about 40, but it's definitely possible if something really, really bad happens to the company. But again, that topping out formation. If we use some EMAs, which I haven't shown this whole time, is down crossed on the weekly, down crossed in October. So that's why bears have said it's our time to destroy the stock price. That's what they do. Profit off of it. Right? So if somebody was using this, that was an interesting sign, or just the trend line I was showing. Once we lost the trend line, bad news. So it's still in a downtrend. Could draw this trend line above. Like this. There's an intermediate one here as well. And you could see bears in firm control in the death cross. So this is what I was saying. I remember for several months in a row, I was saying, everybody watch out for the death cross on the EMA's death cross, and everyone's because on the news they don't talk about this on TA usually on CNBC and Bloomberg they don't talk about this. So your death cross, and then bears crushed it. So now just watch out for the support levels. 83 immediate to the downside. But again, I'm talking long term. We could be looking at some relative bottom right now. If we zoom into a 15-minute or 1 hour and all these tech stocks, they're all oversold at this point. So what's going to happen this morning in 2 hours from now or 3 hours from now, we could get the bounce. As a swing trader, though, I would like to see a little bit more price pattern support. So just one, there's a saying where in Wall Street saying, don't catch a falling knife. This is what it looks like. It's pure red to the downside, just like this. I would like to see some basing of support. So how do we, the case in point on March 14, how do we know that? Is it needs to stop at some point. Either we're going to get a trend change reversal on a 15-minute, 1 hour and reverse to the upside, or it's just going to stop dropping past a certain price level. The support, the floor. That's what I'm looking for on PayPal. So this is not the floor, at least for now. Yes, you could have like a February 24, 25, right here, a 1 day reversal. Okay, that's definitely possible because it already happened on the start of the war. It could definitely go back up to 92 or even 100. Short squeeze, possible. I'm curious if that's going to repeat itself on the charts. So I'm curious if it's going to bounce up, pull back down, and then we get a trend change after earnings. Could definitely happen. That's what I'm kind of looking out for. But the big example is I need to see support. And this is where the big money is looking at. Day traders are trading this type of stuff, just like 1 day up or 1 day down pops. But swing traders were looking for more of a trend change. So I'm looking for it to do something like that, or something like this. For bull case, if it's bear case, you could still watch out for it. It could bounce up, but then continue the downtrend. So that's why I'm not getting excited about it. The only thing I'm excited about is low RSI as a trader. But 2 days, I'm gonna wait for after the earnings. I'm not gonna play it before the earnings because it's already deep in the downtrend. I want to see something like we kind of need to see a strong support like on GameStop and AMC back in 2021. Let me ask a question. Would it be a good idea to sell when it goes up and buy when it goes down, even though technical analysis says otherwise? That, what you just said, is more of a day trader. That's what a day trader would do, I would say. So if I'm interpreting what you're saying correctly on PayPal, using a day, like even if we use a daily chart, or we could use like a 15-minute chart, that's a short-term strat that the day traders use. Meaning that if this price bounces up, I think you're trying to say just short it, right? Sell like that. Generally, in normal market conditions, probably yes, but these are extraordinary market conditions. And then he's saying, and buy when it goes down. So if it goes like this, the price would go up and then it crashes down again, and then you buy it down here. So that's one type of day trading strategy, but timing the exact top and bottom, you need to be really good at technical analysis to do that. So that is what day traders do. But at the same time, I would not ignore the technical analysis. The bigger picture is I'm kind of waiting. Investors are waiting. I mean, PayPal, this is the problem with PayPal. It's been in this low RSI range for a while, right? So is this RSI on a weekly going to turn to upside down head and shoulders, which would be bullish? Then I would buy again. But then I need to wait after the earnings personally, because we have no idea what these 50 companies, 100 companies this week, what the earnings report is going to be, and then what the outcome of that is going to be. So some options will do like a put call option spread, where they don't know where it's going to go. They just know it's going to go up or down. And so they're going to play that, those odds. But at the same time, though, as a stock trader, I need to see the information first. Oh, okay. So you're new. Okay. So if you're new, I would highly recommend study everything on TradingView and then paper trade. Do not try not to use real money. I would recommend, because there's no reason to lose $1,000 or $10,000 and then learn something. It's like, no, we could just practice for free and then learn that way too. If you just started out right now, this is a very intermediate, probably to like advanced level technical analysis live stream. So this is not like TA 101 right here. So I recommend on TradingView, there's a lot of free education articles, videos, not just my stream. There's also, TradingView has a wonderful YouTube channel. So if you want to just watch TradingView lessons, I would highly recommend that. I also have a free Discord with a couple free resources in there as well. So if somebody's brand new and watching this right now, I would just start with just focus on the price first. Price and volume. It's because technical analysis is the study of price and volume and the changes within, okay, relative to other price levels in time. So it's just not about like buying or selling blindly. It's technical analysis. There's a real technique and there's a real strategy to it. But please keep in mind, there is a true statistic out there that the saying is 90% of day traders will lose 90% of their money in 90 days. The 90 rule. That is very true. That is very true. The way I overcame that is I studied and practiced a lot. I spent so much time inside of TradingView, inside of this trading panel, looking at the Pine editor, looking at all these tools. I tried every single tool on the left side. I looked at every time frame. I looked at almost every single version of the price. I looked at all the indicators inside of here. I looked at all of them. I understand all of them, right? So I studied a lot. There's a lot that goes behind the scenes that I don't show on these streams. So, and I practiced a lot in crypto, paper trading, stock trading, paper trading. That's why I improved a lot personally. So it's not just like dabbling once a year. At one point I was doing trading and studying like 4 hours a day every single day for a year. And on weekends, sometimes I remember when I was really going after it in terms of studying and working, I would spend like 12 hours on a Saturday on the charts. Like that's the type of person I am. I just go obsessive with it. Try to get good. Okay, try to improve. All right. So anyways, let's move on to crypto and we'll end the stream. So crypto, we go total market cap. And this is a index chart of the crypto total market cap in dollars. Very powerful chart. It's on the daily chart. Now, what's going on here is crypto is correlated with the stock market, okay? Because crypto, if you think about it, is a financial tech device, digital asset, very correlated with the stock market. So if we compare the charts, we could see, let's just look at this, April 2022 to just April. It went down, right? If we go back, rewind to QQQ, April, what happened? Went down, this blue circle. And if you go to the crypto market, it's almost the exact same thing. So there's a very strong correlation with crypto and NASDAQ. That's why we just looked at a lot of tech stocks, because it probably will affect cryptocurrencies a lot, the volatility, up good or bad. So as it stands right now, in the short term, we are in these two trend lines for like a 1 to 2 year chart. We're retesting the support of, what is this, 1.74 right now, this little yellow line, this diagonal trend line. There are horizontal lines which we'll draw right now. So there's support at 1.66, 1.60 trillion dollars, 1.54, 1.44. I'm going to draw a lot because just in case the market crashes, 1.36, 1.26, 1.19, and then 1 itself. 108. There's a lot here. Or 1. Right? So these are all support levels that the market can retest to the downside if we go into a real crash. The bigger picture, however, is there was the head and shoulder scare, yes, to the downside right here, but it's still consolidating and still trying to maintain the higher low weekly. So the support is 1.63. That's the number we have to hold above, or else the bears are going to attack. This is a kind of rising wedge pattern, so I would watch out for sometimes in a rising wedge pattern. It's not really steep, but once we lose the support, it's continuously downside pattern if it's going to be textbook. So just watch out for that. This right here, this 1.63, this is the line. We have to not go below. If that is, that's the bear case, meaning this, the lower low. Once we lose that support and retest it and break down, it's bad. But the bull case to the upside, again, if tech stocks, everything goes well for a month, and even if the Russia-Ukraine war hopefully resolves, ends peacefully, I could see a bull case also. Right, the measure move is 25% to the upside, so that brings us to 2.2 trillion if it's going to get up there, or 2 trillion. Right, 2 trillion. If we can maintain the higher low here and try to make a higher high, maintain an uptrend, it's definitely possible. But I mean, everything needs to go really, really well with earnings and such, and news catalysts. But you know, we tried. Bulls are trying in the crypto market right here. You can see we're trying to rally and then pulls back. We're trying to rally and it pulls back. So this is what I'm saying. Those 5 catalysts right now, and I'll repeat it again. It is COVID-19, Omicron, stealth Omicron, the Russia-Ukraine war, technical downtrends on the charts like double topping, the FOMC, Federal Reserve tapering program, which started in November 2021, which is basically started the crash. And then now we have stock market earnings season. Those are the 5 catalysts for now. Also, there's the 6th one, China COVID lockdown, which is going to affect supply chain in the next earnings. If we think about it, right? If I just take a second to think about, okay, what kind of companies are producing items in China, and then I think I saw the headline, something about like, I don't want to mix the numbers up, but a very large percentage of Shanghai population is locked down and not working in April because of COVID lockdowns. And now there's fears of a Beijing lockdown, right? So it's like there's a lot of factories over there, right? So the next earnings, you're going to hear the companies say it's because of those lockdowns that the 3 months that we're in right now, the sales are not as good because the production is not there. The supply chain can't keep up. Nobody's working on it, right? So there's a problem there for even the next earnings, next 3 to 6 months. We got to watch out for that. Just looking forward. But how does that pertain to crypto? Because if tech stocks are going to keep crashing, then how can, unless something really good for Bitcoin happens, it might just follow the trend. Okay? Because we already had a lot of good catalysts on crypto, and it's not enough. It's, in my opinion, it's enough to hold the market up, but it's not enough to go back to 70,000. It's not good enough in terms of the market conditions, right? In terms of, we had Russia quietly kind of banned crypto mining right before the war started. And also we had the digital coin catalyst from the Federal Reserve USA saying they're going to look to a digital coin. But in my opinion, that's kind of on the back burner right now because the Federal Reserve, has to focus on the economy. So hopefully that's the bull and bear case. Support resistance, and the trend right now is actually, it isn't a baby uptrend, but I still interpret this as consolidation because it's basically stuck between these 2 blue lines. All right, next, look at Bitcoin futures for a second. This is the big money. This Chicago Bitcoin CMA futures. We're going to go a little bit over time today, but you can already see the futures already lost it. Market open, okay, 38,395. So Bitcoin's already being shorted, sold this morning. We're already losing the support right here. It's a little bit cause for concern because it's held that 1, 2, 3, 4, 5, 6 times, and the 7th time we're breaking down a little bit. Okay. Okay. Well, Manny, what did you send him right there? I'm just curious. Did you send him to TradingView stuff, or where did you send him? I think like people are trying to help each other out. I respect that, but just want to make sure where did you send him to the resources? So Bitcoin CME futures right here. Again, we kind of lost that um, support range right here, 39,000, 40,000, right? So just kind of watch out for that right here, right here. If we lose that, we have to stay above 35,000, have to stay above 37,000, okay? So what we want to watch out for is we draw some larger Fibonacci. February 2020, 68,860 is our relative top and our relative low, right? So we're bouncing above the 50% retrace right now. That's what's happening on Bitcoin. Where's the 618, 30,000, right? Because if we break lower low, lower high, if this is our lower high, this is big trouble. Right? We already had the double top on the weekly, lower low, lower high, and the lower low is definitely possible on Bitcoin. Okay, just watch out for that. We lost this trend line. You see that? Lost it. Just like tech, lost the trend line. Not good. Right here. Now we're holding this trend line. If you lose that, I'm expecting some serious downside in Bitcoin. So just keep that in mind right now, is if we lose the support of 35,000, 36,000, we're in big trouble in crypto. Retest the 30,000, bears probably going to push it down to 25K. Right? Probably push it down to 25K, 30K, 25K. Watch out for these two bearish targets to the downside. The bullish targets to the upside will be resistance, so 50,000. 50,000 and probably 60,000 over time. How long did this crash take? Let's just do time analysis. Not always perfect, but it's there. Is 90 days. So 90 days, which was this one. Again, 90 days. So we're kind of hitting that 90 days mark. This is not a very convincing rally. Okay, the support. Because last time when we had the Dogecoin crash, we hit the 618 down here, the previous 618 of fib level, and then we immediately bounced off some really, really good bullish catalysts. But if you can see the hesitation because of the 5 global catalysts right now is it's not that good. The 90 days of consolidation, that's not that strong. So if we cannot rally successfully, demand falls, price falls. Watch out for that. I know people hyped on crypto are really excited still, but you know, we just went through the stock market, so just watch out for the spillover effect on crypto. Look at a couple more cryptos. Look at Ethereum USDT. Ethereum USDT right here. So we have a support level on this trend line. 2400, 2500, so 2600 is the downside support. And again, I've marked these here for a long time. It takes time. As a swing trader investor, it takes time. A month, 2 months. How long did this take? 90 days again. So it's in this daily downtrend. Now, what's happening is, where's the support going to be on Ethereum on the short term? This 15-minute 1-hour bounce is underway right now. But again, it's in a 4-hour downtrend confirmed by the EMAs to the downside. We have a 4-hour death cross. Okay, so then it looks like 2600 is probably in the retrace for Ethereum. Loss is 618. So then where's the downside? 2,700, 2,600. Okay, unfortunately, just a side note is there's a problem, right? Like, because if you think about it, anybody could start trying to trade and invest in anything, right? Try to trade and invest in stocks or crypto or forex trading. But then it's just jumping in, and the question is well, are we going to go up or down? That's why we use technical analysis to forecast that present and future trends. So the problem is if a lot of people are starting right now and they're starting inside of a bear market crash, is what I'm saying, like an S&P. If you're starting now on QQQ, it's rough right now because 2020 was the best trading year ever for bulls. Phenomenal, right? So if somebody just randomly started here on April 2 years ago in April 2020, they had the best day trading and bull swing trading investing of their entire life, probably, right? But then if somebody started randomly on December 2021, they probably are down right now in their account. If they just bought randomly, they're down in their account. If they just started right now, they're like, what, why is it so hard right now? Right? So that's what I'm saying is we use technical analysis for price and volume changes, support resistance, trend lines as well. Okay? You just have to recognize that we're on the downside of this incredible rally that we have. It's potentially starting a bear market, potentially, if these support levels in stocks and crypto do not hold. So I hope that makes sense for people, is just to understand like what market conditions are we in right now, and what are the two scenarios. I think what I need to caution people about is that we are not in 2020 stock market or economy conditions anymore. It's not even 2021 conditions anymore. We're in a brand new world right now. It's 2022. Just wanted to make that, clarify for people. Okay, Binance Coin. Let's look at Binance Coin. BNB USDT. Again, if we turn everything off, and I love doing this as an exercise, is turn everything off, go on a daily chart, only look at the price and volume. We could look at the whole history of BNB coin, right? Binance coin, and just look at it. And then I have to ask myself, what is the trend? Where's support and resistance? So right away, it's consolidation trend, meaning sideways trend, the price going sideways. Confirm that with at least 2 touch points like this, even though that's not the perfect triangle we could draw. We could also draw trend lines, resistance trend lines, support trend lines. There's the triangle. But then also, if I didn't know that, you could just kind of see it. Well, is the gold price going up anymore? Not really. It's going sideways. So if we know Wyckoff theory, which is another kind of intermediate to advanced theory, there's the accumulation, the markup period, and then there's basically the distribution period, the sideways period, and then there's the markdown period. If we're using basic 3 phases, basically up, it's down, it's accumulation, markup, distribution, markdown, capitulation. So watch out for that on Binance Coin, because this is kind of feeling like, if you've been in crypto for a long time, like 2017, 18, 19, or even before that, it kind of feels like some kind of top. That's what it just feels like on a chart, like what it looks like and what it feels like, because we had a weekly double top resistance of 719 that has been holding for a long time. This particular trend line right here, right, it was ascending triangle and then fail, right? Bitcoin failed it too. Bitcoin tried to hit the ascending triangle. We lost the support level, and now the only hope is this upside down head and shoulders. But we have to realize that at one point in the pandemic, Binance Coin was $10. Now it's $390, 39 times more expensive. That's why it kind of feels like the crypto bubble might pop, possibly in a bear case. So let's just look at that scenario, right? If it's going to pop, and meaning market bubble is going to burst, then we're going to lose 50% to 350. Where's the lower low? 278, 165, 92. A la, if we just think about like Netflix. Remember Netflix chart? Netflix chart kind of looked like this. Well, I mean, it was a better bear setup, the double top with the head and shoulders, and then bad catalyst. But if we kind of look at a Binance coin chart, it's kind of similar, right? 2020, we had amazing rally, and then we went sideways. And then if we can't keep going up, like I'm expecting the prices to just fall. Nobody wants, if there's no demand, where are the buyers right now? Life is too hard to, there's too many bad things happening in the global marketplace right now, in economy and stocks, and people's lives that, you know, does everybody have money to buy crypto right now? I don't think so. Just on a personal level, I think people are trying to just survive and like thrive in their lives in this post COVID-19 world, right? So it would be interesting if we retest this trend line. And again, it's just my opinion. It's not financial advice. Okay, it's just education and my market observations as one person. So this is not like financial advice. This is not financial advice, just educational and some market observation comments. So $300 would be an interesting support level for Binance Coin. And if this breaks to the downside, I mean, we could have a 60% to the downside, which is actual real Fibonacci level. So 179 or $200. I'll watch out for that, because if it's going to start downtrending and we can't break above this resistance, then it's going to make a lower low most likely. Watch out. Okay, next. Do a couple more here. So some of the big ones that people like. Here's Solana. Do Solana. So again, Solana USDT is interesting. It wasn't an uptrend, right? It wasn't an uptrend. They made this topping out head and shoulders, which kind of completed 31% to downside. We hit that target, definitely. If we lose the big target, 68%, 69%, almost hit that target to the downside. But you can see it's interesting with Solana, with these big coins that mooned, is this a consolidation? Like right here, is this a consolidation or not? Are we going to break up? Because that's the bull case. You break to the upside, retest 243, probably go to 300, 400. That's would be the best case scenario. But if it's not, we measure this and say 73% to downside, which would be deep pullback, $25, right? So that's what I'm watching for. The easy way for me to do this is, example for TradingView is alerts. So alerts, I set alert at 147. So how do I do that? If you have at least a pro account on TradingView, you can have multiple alerts. I think a free account, you have one. But on a pro account or a premium account, you have more than one. So I would do it like this. I would just put my alerts so I know, is this going to be a potential upside down head and shoulders? Again, that's the bull case. If that is, then it's 70% to the upside. That target is 240. Bull target of, but the inverse is also true. It could crash down 50 to 70%. So then the bear target long term is $38. That's really cheap relative to now. That's lower price. But I would set alerts. The big resistance acts as resistance as well. I right click or Alt A, and Solana USDT resistance level potential breakout question mark. So now I don't have to stare at the computer all day long like this, right? Now I don't have to, that's one resistance level. I could draw another one here at 137.75. And this seems boring, but this is how, if you do this for a lot of stocks and coins, you're getting way ahead of everybody else. This is, you're using actual support and resistance and then using technology, leveraging it. So I don't have to look at 200 charts a day. I set my alarms and then I could go do something else. That's why I enjoy swing trading, is I don't have to be in front of the I don't have to be chained to my desk. I can leave the desk if I want to. So again, let's do the support level. So this is, if you think about it, this is better than drawing, just doing what I'm saying. Just doing gray lines is better because you get an actual alert when it hits that level. So right here, 8044, I'm staring at this. You have to type it in 8044. Potential breakdown. Let me get one more here at 7064. Make sure that price is correct. Breakdown, I copy paste that. Breakdown number 2. So now, yeah, at least have some alerts. I have some alerts for upside or downside. Then I don't have to worry about Solana so much as a swing trader. I'll still check it, but I don't have to stare at this all day long. Okay, next one. Let's do a couple more and then we'll close out the stream because I know people really enjoy cryptocurrency trading and investing. So Cardano 88. Cardano. This is interesting. Look at this chart, right? We're missing some of the 2018 and before information, but at the same time, 2019, we have at least some of that. Where this is Wyckoff theory, right? We're coming down from a capitulation, down from 2017 to 2018, if you remember the price or look at an old chart. Then it came into an area of consolidation. So this accumulation, we've established a support level, accumulation, price markup, distribution. And now if we lose this is actually turning into a downtrend possibly, then I'm looking at markdown. If it's going to be Wyckoff theory in effect. But then the inverse is also true. What if this is just a giant consolidation period before we go up as well? So that's another case I have in the side of my mind. It's always good to know the two outcomes. Okay, but if we put Fibonacci for support and resistance, right? Almost looking like a tech stock. If I block out the ticker, I would actually think like, is this some kind of tech stock related to NASDAQ? Because it looks exactly like the crash. September to November was the high of stocks, remember. And then Cardano started downtrending. I was warning people about this. Watch out for $1, $1.20, $1 support. And we actually hit those targets over here. Once we lost this triangle, game over. So now, waiting for it. It's stuck under that trend line. Crypto, I'm not going to call an uptrend until we have a serious trend change. This is a downtrend on the charts. There's no question about it. This in the circle is downtrend. And then if you know TN, you zoom out, Cardano is 3,500% up from its pandemic low. Please keep that in mind. It's 3,000% more expensive than 2 years ago. Cardano. So the bear case, the bear support level would be right here, 66 cents. 66 cents. Okay, to the downside, right? Low, high, low, like that. 66 to the downside, right? The upside bear case would be this dollar right above. Dollar. And then probably like $1.20. I'm looking at this resistance over here. But again, we need a trend change to get out of here. Again, as a swing trader, I'm looking for support levels. This thing needs to stop dropping and reverse and bounce up. If it doesn't, then it's downtrend and I'm hands off. I'm not touching Cardano. I've been in crypto too long, so I know the best time to buy crypto is when there's an extreme global crash. Everybody quits and sells the market, which I did buy down here in this zone. And if you've been a follower of my streams for a long time, you know that I bought crypto down here, Bitcoin 6,000, 9,000. I sold at 65,000 range in May 2021. And then it's just been dabbling in trading. But once I see the downtrend, I'm not really touching it. I'm not touching it because I know crypto needs to crash down to oblivion prices. Everybody needs to quit the market, and then I'm going to buy that later. Right? Not at a greed, and it's not about that. It's more about, if you study the charts, is where's the best price to buy an asset. Buy low, sell high, generally. Okay, so let's keep going. I know, let's do like Doge coin because that's actually related to Elon Musk a little bit. Dogecoin. Dogecoin. So again, 2020 is what I'm talking about. You see it here in the charts. The accumulation phase, mark up, distribution, and then where is the capitulation? Where is it? It hasn't happened yet because people are still hodling their coins, which is okay because sometimes hodling is the right thing to do. Sometimes, right? When you get a little consolidation, you get some more markup. Consolidation markup. This is a big consolidation. It's a 1 year pullback wedge. So when I look at a chart like this, I'm okay, Dogecoin is either mooning back to the 65 cents or this thing is crashing way down to 4 cents or 1 cent. It's all there in the charts right now. In terms of investing. Okay, I'm not talking about day trading and scalping with leverage and futures. I'm not talking about that. Because in America, we don't have really much access to that right now. This is a really strange little bounce. This is probably related to Elon Musk, okay? Dogecoin, this is probably a bad example. But this is the only green one right now because Elon Musk Twitter deal. Also, there was a bullish setup here as well for day traders, but actually there's a setup on the 1 hour. But this is not a really good example to use because Elon Musk Twitter takeover bid news. That's exactly why this is happening. Interesting though is on the daily, it would be interesting to see if the Twitter news is going to confirm this head and shoulders. So let's call that out right now. Potential upside down head and shoulders where we could retest the 618 or the 24 cent level on Dogecoin just because of that Elon Musk news, but be careful of this one. But this is one where maybe I'll set some alerts on these on my own time. 16 cents. This is the neck breakout of this potential setup. Just want to watch that price, 1665 area. And then I'm going to watch the immediate pivot point break, the spot we just bounced off from 1300. Because if we lose 1300, like tomorrow or something, for whatever reason, that would be bad. That would be a bear break to downside. So it's support level of the inverse head and shoulders. Okay, so if we're looking at this now, 40% to the upside, but the reverse is also true. We could get 40% continuation to the downside as well. Right, that would bring us back down to the 0.88 retrace level. Right, so once in a while, we do get some news catalyst breakouts in crypto. Now to close things out, I'm just going to let's look rapid fire at some of these because I'm looking at USA crypto based list. So Bitcoin's still in the 4-hour downtrend, but we're getting this low RSI range. Ethereum already starting, the day traders are starting their 5-minute, 15-minute bounce. Look at 1 hour here. In the 1 hour starting. So day traders could probably try to scalp some crypto over the next 2 hours or 1 hour, but I will watch out for, see Dogecoin obviously with the news. SHIB as well. But there are a lot of bounce opportunities in some of these crypto for crypto trading. Not quite a swing trading setup. These are more day trading setups that I'm seeing with my eyes. Now the question is, are we going to get bull follow through or is it just going to be a bear dead cat bounce? Meaning, is it just going to bounce here and then continue a downtrend? Or is it going to bounce up and actually trend reverse? Because that would be good for bulls. Okay, so that's just two scenarios I'm watching out for. Is it going to be is it rally into a bull continuation or rally into a bear breakdown? Ooh, VeChain with a nice double bottom here. Bullish momentum. Same thing with Mana, Decentraland. A lot of these looking very similar. Okay, so it's going to be interesting. Again, as a day trader mindset this morning for stocks and crypto are we going to bounce up for 1 day or 2 days? Because that would, right before these tech earnings, right? People selling off and such. I mean, people buying and closing their short positions is what I'm saying. ApeCoin with its ApeCoin with its uptrend, interesting. It's like the only one in a 1 hour uptrend. So ApeCoin might want to keep that on your list, uh, just because for now, out of these coins which went down, it's the only one in a 1 hour uptrend. Very interesting. It's the only one that's actually going up for now in this list, because everything else had pulled back correlated with Bitcoin. Everything's downtrending, right? Hitting this oversold bounce on the 15-minute, 1 hour. Rapid fire, just get a good feel overall for the market visually before drilling down. Now CRV try to have a bounce. CRV still in this 1 hour uptrend right now, trying to hold probably the 50%, looks like. Yeah, just bounce out that 50% and then trying to test a hold above here. I'll watch out for this one though, because sometimes it likes to bounce up and then retest right here, this spot before bouncing up. So just be careful of that. So there were a lot of intraday crypto setups for the bounce. People, you know, might want to take some risk. It depends on you, how aggressive you are as a day trader. KNC is still trying to hold, but KNC's been in an uptrend for a long time. That's what I'm saying. Watch out for some of these coins that they start uptrending. It's the only one that uptrends out of like 100 coins. Then maybe everyone's going to play that one, the pullbacks. Right? So just watch out for that if that starts happening on some of these coins. Some of these coins hitting their support level and bouncing, so it's not a complete shock to anybody that these are going to bounce. So again, it's not a 100% fact that, okay, if tech stocks crash, that Bitcoin and crypto is always going to crash. It's not 100% correlated. That's why I still have to watch, set some alerts. This is for somebody else. So they're all kind of looking the same. If you really just look down 80 coins on the same time frame, they're all looking about the same. But as long as we have support, it's good. That's good. And yes, just to close things out, we do have this 15-minute, 1 hour oversold bounce for some of our day traders, but some of these intermediate time frames need a little bit more information in terms of where the exact bottom is. Even on this daily chart, again, we just need to hold. I need to really see the crypto holding above 1.6 trillion. All right, so I went through a lot today, and thank you so much for watching and following. Again, this is not financial advice. This is just educational TA charts and observations from one trader analyst. And again, if you learned something, if you like something, just go ahead and follow me on TradingView, YouTube, and Twitch. And I have a free Discord group where I release one of those types of weekly watch lists, sometimes about indexes and crypto. But this week, it's all about stock earnings. So that's the watch list for this week. And again, always, I just want to just remind people, beware of online scams right now that's going around online for like the past year or two. People asking for personal information and whatnot. So just beware of scams. And for education material, I would just recommend starting here on TradingView as a start. So the TradingView has a wonderful YouTube channel and wonderful help articles from the TradingView staff themselves. And I would recommend for there's other streams as well. I'm not the only streamer, so maybe check out some of those resources as well. So thank you for watching and joining. Hope you have a nice week, and I'll see you next week on the next live stream. Thank you, and bye-bye.